What is up everybody, welcome back to another stock market video, and today I'll be talking about 3 stocks that I'll be buying in February and also over the next few months. So unlike other months, I don't see any other bargains currently in the stock market, so I'm just going to be buying some stocks that I already own and familiar with, but I do see some future events that are going to be pushing these share prices up. So the first stock that I've talked about is already up by over 50%, and I released a video on them about less than a month ago about how I was going to put a decent chunk of money in them, so it's good to see it's performing well already. So bear with me if you haven't noticed, I'm getting over a cold, and also I've been delaying this video because I had another video to upload but that got corrupted just due to some technical computer issues. But as you know, I'm already building another computer in the background, I'm just waiting for more parts to arrive. Anyway, with all that said, let's get on with the video. So we are in the computer and you can see that Palantir has returned for us 55.59% currently. So as we can see from the charts, I had a wedge pattern forming from my last video that I did a couple of weeks ago where I started buying heavily. And as I saw, there was a big opportunity in them. Now, I wasn't expecting Palantir to take off so early. I was actually waiting for the good earnings and also for the lockout period to finish. But you can see that they already shot up straight away due to some good news. It topped out at about $45 and then came back down again to settle now in the mid to high 30s. So now I'm just actually going to change the Palantir chart here. So then I can chart a lower line all the way across. So I've just added the support line here at $30.50, that if it goes underneath here and it could head lower, then this is going to be a good buying opportunity as it is past the lowest of the high points, if that makes sense. And if we just zoom into a bit here in Palantir, we can really see that there is a bit of profit taking as it's come up all the way up to $40. There is people selling out of it because it has gotten a little too high and coming back down again. But again, after a few days, we can really see it gains a lot of support and is now hovering around sort of upper 30s now. But it's going to be hard, I think, to break through $40 unless we get some more very good news, hopefully, which will come after the earnings is released. So this first article here, titled 3 New Catalysts for Palantir's High-Flying Stock. So this article talks about Palantir's latest contracts that they've got. So the first one here is a 3-year contract with the FDA, and this one is a 3-year contract worth $44.4 million. The second one stated is the continuation of a multi-year Army contract, and this one could be worth up to $458 million over the following 4 years. So this is good recurring revenue for them. And the third one is a new contract with the UK National Health, and this one could be worth up to 23.5 million British pounds. So just to summarize it, Palantir expects its revenue to rise by about 44% to $1.7 billion this year, then grow to over 30% next year. Analysts expect its revenue to rise by 32% to $1.41 billion next year. From this, we can determine that even the analysts think there's going to be a decent amount of growth in there, and 30% growth is pretty big. So that recent price action rise was also because Palantir just had their demo day, and what happens is that they displayed that they did Foundry, Gotham, and Apollo, their products, and then just told everyone about it and talked about it. It was pretty complicated, and I didn't actually understand all of it myself, but it was well received by everyone just to show that product is actually very futuristic. There's a lot of advancements in it, although not a lot of people understood it. It was still very good, and it gave people a lot of confidence in the stock price. Therefore, that's why a lot of people did buy in after that. So here is just that short clip from Demo Day just to tell you what Foundry is all about.
Let's start with a simple question. What is Foundry? Foundry is a first-class data integration and management platform, a comprehensive suite of analytical tools, and an operational platform of applications for business users. But at its core, we believe Foundry is the central decision support infrastructure for any organization. We've built a software framework that translates data and models into knowledge that human operators can use to make better decisions. The Foundry ontology and simulation engine we are demoing today represent this connective tissue between assets in the digital world and actual decisions in the real world. Let's look at what this means for a large supply chain.
So I'll link that full video down in the description if you want to watch that, but I'm not really a data engineer, but to me, as a summary, Foundry is just a highly advanced enterprise resource planning software with AI learning tools. Now, Foundry is really what I'm banking on, that this software can add value to business, whether by doing things smarter, which then reflects on cost savings, getting rid of processes that are wasteful and not needed, optimizing old processes with newer models, Big companies will pay for this. They can also afford to pay for this if they see value in the product, which if they see this kind of high level sort of analytics of how things are done and also see models with it, I think that if it shows that it can save them money, I think they're willing to do that. So while they have a very good revenue stream, what I'm invested in is huge growth. And I think what we need for Palantir is the commercial sector to take off, because Palantir is not really a small business. Its share price may be in the mid-30s, but it's also a $60 billion company. Their commercial product is Foundry. The government products are Gotham and the newly released Titan, which I've talked about in previous videos. So again, let's just go back and watch a short video of what their roadmap is for Foundry and how they're going to make money from it.
Hi everyone, I hope you all enjoyed John's demo. I want to talk a little bit about the future of Foundry and how we're going to increase Foundry's impact. We think about doing that in 3 ways. First, reaching more customers through our use case catalog and modular deployment options. Second, reaching more users so that Foundry can power every critical decision made in and across institutions. And this means getting Foundry into the hands of every user who needs it through things like a new mobile offering and enabling users across organizations to collaborate so that they can work together to solve hard problems that can't be solved alone, like the ongoing pandemic and climate change. And third, we're going to build on what you saw in the demo and innovate in our approach to how AI is applied to operations. We imagine a world where every decision made is informed by the best data possible, and decision makers leverage simulation to fully understand the wanted and unwanted consequences of their actions within complex connected systems.
The biggest issue to me is adoption. One of the worst things a business wants to do is change the full structure of how it executes its actions, because this would disrupt the flow of day-to-day business. But hopefully with this product roadmap, they can show their customers that it's going to be worth the pain to move over to Foundries, because they'll benefit from it for having better processes and also saving money in the long term. So just recently, here is another article why Palantir share price rose. Palantir surges on partnership with IBM. So this partnership with IBM could be potentially really good for Palantir. So let's just hear from COO of Palantir about what he thinks about it.
So Sham, I know that this is the largest partnership of its kind for Palantir. What does it mean for the company, and also as it relates to the reach of your sales force?
There's no question that this is the largest partnership that we've done, and we're quite excited about what it means in terms of being able to bring operational AI to frontline users, the folks who are providing the vaccines, who are doing the allocation, the folks on the factory floor who are managing the upheaval during COVID. And by partnering with IBM, we have the ability to reach every customer where they are in 180 countries around the world to help them solve these problems very, very quickly. So it's a huge boost in that regards.
Going forward, there's going to be a lot of upside to Palantir going into the next month, and we could see them breaking $40. So for me to gamble a lot of my money into this, it's been a pretty good choice so far. So the next stock is Tesla, and I've got 9 shares at them at the moment, and they're currently returning 70.75%. And just quickly down here, you can see that I recently bought 1 Tesla stock. So after the S&P inclusion, we can see that it had a massive run up and is now, I think it's starting to cool off. It may still get lower, but I want to be buying more shares because of basically 2 things. One is the FSD, so that's full self-driving, that I think it could be released very soon. It might even be this year, but once that's released, I think that's going to really send the share price up. And the second point is just the fact that their production volumes are starting to ramp up yet, and they still have 2 more factories to come online. So currently at the moment, Tesla trades at a massive PE ratio of 1327. And to me, for what their revenue is right now, I think that's just really high. So for this part of the video, what I want to do is I want to show you that I'm investing in Tesla for their future growth, because paying $850 per share right now is just too expensive. But if I was to pay $850 per share for what their revenue growth is going to be like in the next 5 years, it's going to work out to be really cheap. So I'm just going to go through that working out with you, and I'm going to show you that right here. So just that we cover the basics, the PE ratio is the price of the share is divided by the earnings it has. So right now, it's the price of the share divided by the earnings, which is here, $721 million for Tesla in 2020. And here is a history of Tesla's PE ratio. So if it's 0, it means that there's negative earnings, and you only get a positive PE ratio if you have positive earnings and you're making money. So we can see here in the last couple of years, in March in 2020, they've only started making money, and we can see that their PE ratio has always been high. So here it was 500, going up again it was 800, and then 1,000, and now we're at 1,300 here in February. So moving over to Simply Wall Street, we can see here that 29 analysts have actually had a look at Tesla, and they've got a forecasted growth at 33.6% annual growth. But down here, you can see that their earnings prediction for the end of 2025 is a massive $8.66 billion. So what that means is, if you remember back from the old slide, it was $721 million for the year 2020, and they're now expecting that to jump up to $8.6 billion. So what this means is that the analysts are going to be expecting them to make 12 times the amount of earnings as they are in 2025 compared to 2020. So if we get out our calculator, we can then put in $8 billion divided by $8.6 billion. We can get a PE ratio of 92. So if we then go back to our PE ratio history, we can see that a PE ratio of 92 is actually a bargain right now, if, that's only a big if, Tesla continue to do what they've been doing and doing the same growth as they have been in the next 4 years. But as we know, if any company is capable of doing this, it's Tesla. So while it's good to have these numbers and predictions, you really need to double check for yourself if these are actually correct and actually realistic, that these analysts aren't just putting these numbers out there. So what I've done is I've actually grabbed the numbers from their earnings that they have, and you could just go to the Tesla website and under the investor relations, and then you can actually see their production, deliveries, and volumes. I'll put a link down in the description if you want to have a look at that. So we can see here for 2020, they made 509,737 production vehicles, and they delivered 499,550, so just under 500,000 vehicles. So moving on to my Excel sheet, and this is just a really basic one. This is just to actually have a look at those numbers if they're actually correct or thereabouts for this growth. You can see here that I've gotten from Hypercharts the Tesla production numbers, the annual quantity, and I've recently plugged in the delivered numbers of just under 500,000. And here is the percentage of growth. So they're expecting to be around about 140% of growth. So if they continue this through to that magical number of what I'm investing in currently, which is 2025, for that $8.66 billion earnings, we can see here that they're projected to make that year of 2.8 million cars. So really, while I'm investing in Tesla, these are the kind of numbers that I'm going to be looking for while I invest into them. And really, if they are going to be close to these numbers, because the problem is if they don't hit these production numbers, then obviously their earnings aren't going to match. So the analysts are going to bring those numbers down lower, which means that PE ratio will get higher, which means for us that it's not really going to be the bargain that I calculated right now. So this is really important, why you need to track these companies. And this is actually how you need to build conviction for your companies and to really understand where the money is coming from and how they're going to generate that, because eventually the share price is going to catch up to the company's financials. So the last stock that I'll be looking to buy, if it's a good price, is Social Capital Holdings, ticker symbol IPOE, but we know this as SOFI. So this is the company that's going to be merging with them. And just going back to my portfolio, I'm currently up by 24.7%. Now I just want to point out this is a holding company and it hasn't merged yet, so there's not too much statistics on them here on Yahoo Finance. We're basically buying them from the investors presentation that I've shown before on my channel. So moving on to this article here, IPOE stock, 9 things to know ahead of the SOFI SPAC merger. So there's a lot of things going really well for this company. That's why I started opening a position in them. And this article really outlines some of the major things and catalysts that will put the share price up. And it has actually had just a little bit of a bump up recently, but I'll go over that soon. So the main thing to take from this article is that Chamath is modeling significant revenue and profit growth for the company. Expectations are for adjusted net revenues to grow with a 5-year compound annual growth of 43%. He also estimates that the profits of $27 million in 2021 will expand to profits of $1.17 billion in 2025. So really going from 27 million to 1.1 billion in 5 years is pretty crazy growth. So this is the kind of huge growth that I'm looking for when I'm buying into IPOE. So the stock market has been pretty crazy in the last 2 weeks because of the GameStop saga, and here in this article reading, GameStop short sellers are still not surrendering despite nearly $20 billion in losses this month. And again, this article here, Robinhood limits new users to buying one share of GameStop and other stocks. So those two bits of news was actually a catalyst for SOFI going up in share price, and that's because Chamath tweeted this. Here are 3 apps you can use to replace Robinhood. Number 1, SOFI. Number 2, Cash App. And number 3, Public. And he wrote a disclaimer here saying, I'm taking this company public by IPOE, so I'm biased, but I think it kicks ass. So after that tweet, basically is why it sent the share price moving up a bit. So just going back to the price action of the chart, you can see here that around about the time of the tweet, that the stock actually jumped up to 40% just from that and what's been happening in the market with GameStop. So just one last thing about SOFI, and one of its main advantages is that it's an all-in-one app for everything that I've spoke about in previous videos. But here you can really see from this investor slide that 50% of Americans use more than one bank for financial services. So this really appeals for the younger generation where they have all their financial services, loans, which they can apply for, all in the one place, even buy stocks. It's all really handy on their phones. And I think this is one of the key draw cards for SOFI and bringing new customers onto them away from places like Robinhood and other banks. Because of the current market conditions, I'm only going to be dollar cost averaging into Tesla because the other 2 stocks have run pretty hot, and Palantir just keeps on running because of good news upon good news. But hopefully with this lockout period, we don't really know what's going to happen. I'm going to be happy if it keeps going up way past $40, maybe even $50 if the earnings go really well. But if there is an issue with the lockout period and a lot of people sell, it could bring the stock down into the high 20s, which could present us with a buying opportunity, which then I'd be seriously thinking about. IPOE has just been running a little bit hot. We don't know too much about them because it is a SPAC, so I'd like to see more financials from them, but you don't get that from them, so we're just going to have to wait till after the merger of what that happens. I reckon mid-20s is a little too high for me. I'd like to see it below $20. If you've enjoyed the video, hit like to support the channel and hit subscribe so that you can get notifications of when I release future videos. Also, I'm currently working on another video coming up very shortly of how I may have made $50,000 on property in the last 12 months, so look out for that. The trading platform I use is Hatch and Sharesies for individual companies, and I use InvestNow for index funds. If you want to start your own investing journey, feel free to use the links in the description below if you are in New Zealand. And for those who have not seen me before, my name is Gifford, and I use this channel to document my journey as I try to figure out how to become financially free, and I share that knowledge with these videos. These particular videos is focused on my stock market journey, who's completely new and still within their first year of stock market investing. And I'm trying to do all this to build my portfolio so that I can be hopefully financially free in the future. So let me know your thoughts in the comments below. And also, if you haven't noticed, in my thumbnails for these stock market videos, I also have the total amount of money across all my 3 portfolios, just so you can join the journey with me. Well, that's enough for me today. Thank you for watching, and as always, safe investing. Make sure you do your own due diligence for the stocks that you invest in. You definitely won't want to be getting stock tips from someone who is new, and also you want to be responsible with your own money as well. If you want to have a look at my portfolios, just have a look at some older videos. I share them occasionally, and I show everything of all the stocks that I own and what I have in there. So I'm totally open. You can see all of it there, and I talk about them again. With that said, thank you, and I'll see you on the next one. Goodbye.